Hi everyone, let's go over my medium time frame, low time frame and micro Elliott Wave scenarios on Bitcoin. Starting with my medium time frame scenario where we're looking for a three-wave structure to the downside in a WXY, currently working on the green wave Y over here, which then by itself is a three-wave structure. Now, can this blue wave B already be in? Yeah, well, it can, but then this wave B is very, very short in time compared to a much longer wave A, and I prefer to see a little bit of a longer wave B that is then not yet in. Also, what is interesting is that we have a double top at 27.4k, which could be an interesting liquidity grab before then a move towards the downside. However, if we are going to move towards the downside and continue, then yes, wave B over here was in. However, there is a scenario which I'll show you in a second where we could move to the downside and still move up in then an expanding flat ABC scenario, but more about that later in the video. So in this particular scenario, an interesting area for wave B is that double top at 27.4k for then potentially over here a liquidity grab and continuation to the downside, where the most common target area for the green wave Y is between this white box, the 0.618 to the 1.236, taken with the trend-based wave extension from the high to the low of W to the high of wave X. You can see the 0.618 has already been hit, as you can see over here. But after that the 0.618 has been hit, first time over here, second time over here, if this was the end of potentially wave Y, in this then being the end of wave Y, so we go over here. The problem is that if this is then the first hit of the 0.618 after a three-wave move, first of all, wave Y is then very, very short in time compared to a much longer wave W, but also then you want to see an impulsive structure to the upside following the high time frame scenario in my video, the macro and high time frame video on the channel that I did on Sunday. So you want to see then a wave 1, 2, and then a 3, 4, 5, where wave 2 is not allowed to take the low of the origin of wave 1, but that is what happened on a couple of exchanges. This wick over here has taken the low on the left, which is not allowed in an impulsive structure, and that is why we are still looking for more downside on the chart. It can go up absolutely fine, but eventually we are still looking for lower prices, where there's two target areas that I have in mind at the moment. The target boxes over here, which are confluence areas. The first is the yellow one between 24,850 and 24.3k, and the one at the lower end is 22.6k to 21.9k. If we then zoom in a little bit, go to the 1 hour time frame, move towards the lower time frames over here, then you can see a bearish scenario where this is then indeed a W and then a 535 wave structure ABC followed by a very short X, right? And then we are already looking for a move towards the downside and then again a three-wave structure WXY. So this is the bearish scenario where we continue to the downside and then eventually go up, but it's not going to be a ABC expanding flat. It's a continuation to the downside. So in this scenario, we then have a three-wave over here in a W, likely to be then a zigzag structure, followed then by a corrective sideways structure in an X, WX, and then eventually a wave Y to the upside. And now you would expect a continuation to the downside, where this can then potentially be the first wave structure, followed by the second and a third. This could then potentially result in a zigzag correction and then another move to the downside, right? Because we're looking for a three-wave structure in a wave Y. Of course, this is a three-wave structure potentially by itself, but then this wave Y would be quite short in time again compared to W. So time is important, right? In Elliott waves, time between the waves is very important, and we have to wait and see if price, of course, is going to the downside. But this is a very quick move, sideways action, potentially another quick move. And then if we return and up, then wave Y takes more time comparable to wave W, and that's something I would like to see personally. Now the target area for wave Y, which is the blue wave Y over here, and then a WXY, is between the 1 and the 1.236, the most common target area, which is between 24.5k and 23.8k, which is in confluence with the yellow target box, as you can see. So this is actually very, very important support for a potential bounce on Bitcoin. Now, if Bitcoin is going to move towards the downside here, of course, there is a long opportunity, but you need a plan, you need a strategy, you need entry requirements, right? We're basically trading based on a planned strategy. We don't YOLO, FOMO, catch knives. You want to see some form of support, proof of support, as I like to call it on the channel, where potentially in your case, you're looking for a market structure change, maybe in a combination with some bullish divergences during the retracement. Maybe you use order flow and you want to see trap traders at the lows, like trap shorts or whatever it is that you are using in your plan. Make sure you follow follow your plan for then potentially a move towards the upside. If we then go towards the more bullish scenario, we are still expecting a move up before down. So if you remember the medium time frame bullish scenario over here, X is finished, we're looking for a three-wave structure. Now both of the counts are blue, but we're looking then for A over here, then a wave B, and then a wave C, or this can be a WXY, doesn't really matter. Eventually we're looking for a three-wave structure, and then inside that wave B, as I like the light blue color just now, we have then a WX and we're looking for a Y. Now the minimum target for wave Y is the 0.618 over here, and that is taken from the low to the high of W to the low of X, currently sitting at 26.6k, with the common targets over here between the 1-to-1 and the 1.236 at about 27.4k to 28k, which also has the 28k resistance area over there for some additional resistance. Now, in this particular scenario, the wave Y can have many different forms. It can be a zigzag, it can be a flat, it can be a triangle, it can even be a WXY, but that's usually not really preferred. Now, a zigzag, I don't really see it happening. A zigzag is a 5-3-5 like this, but this doesn't look like a nice impulse or a diagonal. So in this case, I'm also thinking currently about a expanding flat, which is then a three-wave structure in a wave A, followed by a three-wave structure in a wave B, which can be quite sharp. And then we get taking the lows over here because we have a double bottom over here. Interesting. On my chart, this low did not yet wick below. So then we take the low and then move towards the upside. And I think that is very, very interesting for then an A, B, C expanding flat, especially with the news coming in 1 hour. So let's wait and see what's going to happen then. If we look at this scenario and zoom into what we have today, then from the from the high over here, so we then have wave A, right, looking for a three-wave structure to the lower down to the downside in wave B, and then we have the daily naked point of control still at 26.1k, which is untouched. Like, we almost got it. We basically swing failure these highs over here. We didn't really touch the daily naked point of control. Maybe on some charts we did, who knows, but yeah, we still have it over here. So maybe with the news, price might move to the upside, hit that daily naked point of control, grab the liquidity above this high, and then move to the downside. So you get a quick wick, boom, to the downside, take the double bottom, and then move to the upside again. That would be very nice during the news hours. Then if we go towards the CVD, on the lower time frames, we had some CVD divergences. We had bullish ones over here that you can see. The bullish one actually played out in my previous video. I said, well, we got bullish divergences, and the bullish divergences over here got priority because they existed first. Like, before the bearish divergences had the opportunity to appear, we didn't yet have this price action. The bullish divergences were already on the chart, and the one that appears first has priority. Now, it played out over here because price took the high very nicely. So the bearish ones are invalidated, bullish ones played out, so that was brilliant. And if we then zoom in to what we have at the moment and we go to the 5-minute, it's a little bit of a mix, maybe not, maybe it is. Over here, if you look to the blue line, higher low on price, lower low on the CVD, but then even more locally, you have a lower high. This is 5-minute stuff, very low time frame. Lower high on price, higher high on the CVD. Maybe by the time I upload this video, this is already changing. So yeah, that's the thing with the low time frames, right? But then on the yellow line, you can see also again lower highs on price, but over here a higher high on the CVD, which is a bearish divergence at the moment, very, very locally, which of course gives preference to price moving towards the downside, as there is absorption of market longs going on in this position. But still remember, we have news coming up, and I wouldn't be surprised if we move up, hit the daily naked point of control, grab liquidity, and then move down. And if we then go to the news, then at 8 p.m. in 1 hour from the moment this video is live, we have high impact news, as you can see by the red flags over here, also at 8:30. So make sure that around 8 p.m. Central East European time, check your own time zone, that you trade safe around those hours, as price might be very, very volatile. I hope this video was helpful or valuable to you. Please check out the memberships that recently launched, and also my recent educational video I've made about the best trading indicator you can use, in my opinion, which is the CVD. Now, thanks for watching and subscribing, and I'll see you at the next one. Bye bye.